Good morning, guys. Thank you so much. Today we are going to talk about Tesla. So Tesla right now trading $250 per share. It came to 243. So this it has been this crucial support, and we know the resistance here will be more than 257, which started today morning or almost. So don't miss Tesla. So don't miss Tesla. When you see the news here, the Tesla delivery step in on the right direction. So guys, Tesla on earnings on right direction. Said more heavy lifting need Elon Musk. So guys, today is the day to buy Tesla. Okay, do not buy Tesla. Do not miss Tesla, guys. So today is the 2nd, and remember on 8th, when Tesla is going to go to robotic. Okay, yeah, Tesla is going to be robotic, and this thing, I'm sure on today is Wednesday, Friday Tesla will start flying, and today is the best day to buy. And let's jump in about Nvidia, guys. When you see Nvidia over here, today about 114 is also the way to buy. And if you can see this one, guys, before market closed, you should buy your call, because this thing is going to fly tomorrow. In fact, by October 4th. So for me, like, if I would like to buy call, I buy for October 18th. And my break-even, which is if I would like to buy right now, and let's say for example I don't want to spend a lot of money. Let's say the first thing, if you want to buy right now, is going to be let's see, yeah, this one, like a break-even for 18th. And that one, guys, will cost you more than 9,000. So this will be 10,000 call, and this is 100% sure that this thing is going to fly. And if the stock will reach almost one, and I'm targeting like even 137 or 130 by end of this next week. So let's go next week. But if you don't have enough money, I can, let's say your budget, let's call you want to spend like $100 so that you can buy more calls on Nvidia. So we are going to see a call, yeah, yeah, like this one right now. The first one you can buy this call break-even is will be 231, 131. And when you see the delta here, it's very low, but according to the technicals, there is highest chance this thing is going to hit that area. But the best one, the break-even, guys, you should always buy break-even, which is closer to the price, because the price is 280 right now. And for me, if I want to buy this one, I will buy this one, which is break-even, and you see that the delta will be this price, and this is 100% sure you can make good money. So when you buy call on Nvidia, you need to have good money. Yeah, you should have a best money, like 500. So like even break-even around is, when you see over here, break-even will be 123. So guys, I will go to play this video, and let's hear it about Tom Lee. What's Tom Lee saying?
Life moves fast, so do we. Send money quickly with Remitly. If you're not a profitable trader, after working with me in 8 weeks, I will personally hand you $7,000. And I'm confident.
Tom Lee is back with us for his latest musings on the markets. It's managing partner, head of research at Fundstrat Global Advisors, as well as a CNBC contributor. People forget, I think, but your outlook and views are always nuanced to some extent, Tom. So last time you were on, after being pretty bullish on small caps through the end of the year, I wouldn't say you didn't change that long-term view, but you did express some near-term caution. And these people want to know, the people that follow you, the people that watch Squawk Box, they want to know exactly what to do every minute of every day. So it looked to them like you had waffled on your long-term view. And you're going to say the same thing today. I think near-term, you acknowledge that there could be some bumpiness, choppiness, but by the end of the year, you think 6,000 on the S&P.
That's right. I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now we've got two things that investors don't know how to discount. One is, mounting tensions in the Middle East, and then a port strike that is potentially going to cripple the economy. And so I think that as investors worry about this, if we get a dip, and a big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
The worst case scenario for the port situation is something that we've seen. And we shut down an economy already, and that was probably a time to buy. We know that. So we've seen that movie before. Could it be? I can't imagine it could be as bad as the pandemic, but we have shut down an economy before.
Yeah, that's right. So I think it creates headline risk because, the longer this strike lasts, there'll be companies that miss, and so S&P earnings might get downgraded or some stocks might miss results, but that's all just temporary. I mean, those are just short-term headwinds because it doesn't change the long-term outlook.
It's very strange that I don't remember any war that where the effects, and we've been through quite a few back in the 90s and in the 2000s. It never seemed to have as negative an effect on the overall markets as we thought at the beginning of each.
That's right. In fact, if we look at the last 6 sort of global wars or tensions, you almost always buy the invasion. The exception was 2022 with the Russia-Ukraine war because we were also in the midst of a Fed tightening cycle. So that was not a buy the invasion event. But the other times you did want to buy...
Both Iraq wars.
Yep, both Iraq and...
Was the market, where was the market before that happened? Had levels come down, or were they trading at near highs or at highs?
Yes, this is different because we are hovering near highs and we're in an extended market.
And things aren't cheap in terms of multiples.
That's right. But at the same time, we also know there is a lot of cash on the sidelines.
Right.
Because margin debt hasn't risen for 4 months. I mean, that's pretty unusual with a rising stock market. And now money market cash has actually been rising at a time when the Fed is cutting. So I do think there's firepower.
The other issue, just the longshoreman strike, if that goes on for an extended period of time, is that something, we were talking before, how much that cuts off the GDP. If it's there for a week, maybe cuts 0.3 of the GDP.
Yeah.
For every week they're out. Is that something that the Fed comes in with much more aggressive cuts and that fixes things, or are there inflationary factors that also come into play and that ties their hands?
The Fed has to kind of put that in their calculus because the labor market has also softened. So if this is a shock in a way that causes the labor market to weaken, the Fed's going to be a lot more dovish. But we get the payrolls report Friday, and I'd say maybe it sort of early hints seem like it's actually going to be a better than expected report.
But then you also add in what would happen from inflationary pressures, not only from the longshoreman strike, but potentially from oil prices going up in the Middle East too.
Yeah, that's right. I think the Fed at this point would be more concerned if the consumer expectations got unanchored on inflation, and those have actually been improving. So I think the Fed can be less worried about the inflation side of it.
Did you see Tepper talking about China? Would you ever subscribe to that theory? Buy a lot in China?
Yeah, I'd say that not only did China launch a bazooka, but it's really working, right? Because the stock market is has really broken out. I think China is now the best performing stock market this year.
But was the move made? I mean, I think, we had Kyle Bass on yesterday, and I think he would argue long term, no matter how you want to think about China, it's a bad bet. He was suggesting maybe in the short term, it's a good bet. And I don't think he was necessarily opining on whether the bet is over.
Just says it.
But the move, obviously, the big move has happened. The question is, do you see that doubling? Is that in the cards at this point of the game?
Yeah, I mean, something to keep in people's back of their mind. Over the last 10 years, China has underperformed the U.S. by 7,700 basis points. So if China doubles, it's still underperformed by like 5,000 basis points. So I mean, there's a lot of room for a rally, even if it looks corrective.
I think his phrase was something like, it's just a bad bet on communists.
Yeah, no, he's saying long term it's a bad bet.
But
he's saying short term it might be a good bet.
It's not our grandfather's communism, man. It's almost, I don't even know we need a portmanteau for what capitalism, based with communism is.
Yeah.
Bidenomics, maybe. Kidding, Andrew. Kidding.
So guys, I will go to do more technicals about Tesla and Lucid, Tesla and Nvidia. So guys, I don't want this video to be too long, so make sure you subscribe and like. So I'll go to make another several videos today, and I will post all of them on the same YouTube channel. Guys, thank you so much, and I appreciate your time. Bye.